Hello, everyone. I'm Rob Smith in the Black Quant Edge VTF here at T3 Live with Quant Edge 4-week coaching program at T3 Live week 1. And that's usually how you're going to hear me introduce my videos. But for this course, we want to slow things down. I want to make sure you get every concept down exactly. So let's slow it down, right? Make sure everybody gets it, right? No hurry here. So hello, everyone. I'm Rob Smith of the In the Black Quant Edge VTF here at T3 Live with the Quant Edge 4-week coaching program, week 1, where we're going to discuss actionable signals. As I give you time to read this disclaimer, it's important to remember, as far as we're concerned, and it's talking about the universal truths, we speak only in quantitative facts as they relate to the three universal truths of price action. We do not say charts look good, charts look bad, what's your opinion of XYZ? We only pose the question, what do we know to be true? So you will see people on Twitter that are constantly tweeting out their so-called ideas, and they will have a disclaimer on their Twitter because they are speaking subjectively. Once we learn to speak only in the terms of quantitative analysis, you will see that there's no more opinions. We are eliminating opinions. We speak only in fact. We only ask, what do we know to be true? To begin, the table of contents of what we will be discussing: candlestick formations, inside bars, the rev strat, the flip, combinations, the measured move, the importance of time, and a summary, and then some live charts. We can expect the price to move because actionable signals quantify specific technical conditions. More specifically, they show us important equilibriums that must at least attempt to break, as well as showing us when we can identify people caught on the wrong side of price movement. And I'll explain exactly what that means. Section 1, candlestick formations. The regular hammer, candlestick formation regular hammer. It forms after a previous lower trend series to potentially a signal of reversal off the lows. Open and close are in the top 33% of the range of the candle. This signal goes in force or triggers above the high of the hammer candlestick. We expect this to work for the following reasons. Ideally, the shadow or wick of the candle represents an exhaustion of long-side sellers combined with ill-timed new short positions. So what does that mean? This, as you can see here, is the hammer. Downtrend. If longs have blown out and anybody short down in here is trapped, they trigger above the hammer right here. All right? This is known as a shadow. Some people call it a wick. But this hammer triggers as soon as it takes the price travels above the hammer. That's when it goes in force. Although this is an actionable signal, it is not a universal truth because we cannot quantify exactly why it formed. However, it is an actionable signal because should the conditions I just described be true, the probability is high it will work. And that's why we'll take that. The momentum hammer forms near the highs of a strong previous uptrend. The signal becomes in force above the high of the momentum hammer. We expect this pattern to work on the rationale that because it is in a strong trend, the shadow or wick of the hammer candle only represents a profit-taking pullback combined with ill-timed short positions. What does that mean? What that means is we have a strong move up into here. Now, classical technicians will look for hammers on the bottom. We know that we can quantify this, all right? Because if it goes down like this in a strong trend and then reclaims back to hammer up, we have the possibility of anybody ill-timed shorts here trying to short into this strength is now going to be trapped against these two levels. We have reason to believe that there are natural buyers, which is actual buyers of the stock because of this, which triggers them both up here. Once again, this goes in force as soon as the price trades above the high of the momentum hammer. The shooting star forms after a previous uptrend to potentially signal a reversal off the highs. Open and close are in the lower 33% of the range and candle. This signal becomes in force below the low of the shooting star candle. We expect this to work for the following reasons. Ideally, the shadow or wick of the candle represents an exhaustion of the short side sellers combined with ill-timed new long position. What does that mean? Going up, here's the shooting star candle. Here's the shadow or wick representing potentially short sides getting blown out. Late ill-timed buys. This goes in force below here as soon as the price breaks below the shooting star candle. Although this is an actionable signal, it is not a universal truth because we cannot quantify exactly why it formed. However, it is an actionable signal because should the conditions I just described be true, probability is how it's going to work. The momentum shooting star, the opposite of the momentum hammer, forms in the lows of the previous strong downtrend. The signal goes in force below the low of the shooting star candlestick. We expect this pattern to work on the rationale that because it's in a strong trend to the downside, and the shadow or wick of the shooting star candle only represents short covering, pullback combined with new ill-timed long positions. So what does that mean? It's coming down hard, right? And then it attempts to rally back up. Anybody who's short this potentially is looking to cover as they've got profits, short covering. But if the real sellers, which is the people driving it down, right, are still alive, we got some shorts covering. And anybody trying to bottom pick or buy this on the way down, obvious stop would be the low of the candle. And that's where it goes in force. Momentum shooting star goes in force as soon as the price breaks below the momentum shooting star. The bullish kicking pattern occurs when a red bar is countered by a green bar that gaps above the red bar's entire range. The signal is in force so long as the price is above the opening price of the second candle. We can expect this setup to work on the rationale that the long side was decimated during the red candle, and short sellers could stay short as the bar went out on the low. The gap causes all short sellers during the red candle to flip to a loss immediately, and ideally it combines with new longs re-entering as the price is now rising. So you can see here, anybody who was long was getting crushed in here. And anybody short could stay short because it's still going down. However, once it gaps back up into here, everybody who stayed short or got short in here is now immediately underwater. This stays in force so long as it's above the opening, right? As all of these guys scramble to cover, and anybody who blew out long, if they're trying to re-enter, this makes for a very powerful pattern here. Conversely, the bearish kicking pattern occurs when a green bar is countered by a red bar that gaps below the green bar's range. The signal is in force so long as the price is below the opening. We can expect this setup to work on the rationale that the short side was decimated during the green candle here, and the long buyers could stay long as the bar went out on the high. The gap causes all buyers during the green candle to flip to a loss immediately, and ideally it combines with new shorts re-entering as the price is now falling here. Everybody can stay long, short side getting taken out. As soon as it gaps down into here, it stays in force so long as it's below the opening price here. Why price moves? Actionable signals is the why. Why would the price move? Most people don't understand why we can expect the price to move. Actionable signals are why. Although we use the candlestick hammers and shooting stars as actionable signals, they are not universal truths as we don't know exactly why they formed. Conversely, inside bars and rev strats are universal truths as they formed equilibriums or countered them, which cannot be disputed as the bar failed to break a previous high or low. All right? So what does that mean? Let's check it out. Section 2, inside bars. We go to inside bars, we're going to identify whether you're trading a retracement or momentum. There's a difference, All right, it can be quantified. An inside bar is defined by any bar whose range is equal to or less than the previous bar's range. The bullish inside bar breakout. This setup goes in force as soon as the price goes above the inside bar. This is a universal truth, as it cannot be disputed that equilibrium has been formed and a breakout of that equilibrium is being attempted. When you hear me on the VTF, I will not say bullish inside bar breakout. I will say inside and up, right, to abbreviate it, to make it faster. But for right now, to understand it, this is an equilibrium. It could not break above the highs or lows of that. No one can dispute that. It goes in force as soon as it breaks the inside bar to the upside here. Right here goes inside and up, bullish breakout. The bearish inside bar breakout. This setup goes in force as soon as the price goes below the inside bar. This is a universal truth, as it cannot be disputed that an equilibrium has been formed and a breakout of that equilibrium is being attempted. Here, you see the inside bar. As soon as that equilibrium is broken to the downside, the price moves below that inside bar. This goes into force. The concept of this here, momentum or retracement. If the bar previous to an actionable signal is green, and the actionable signal is in the upper 50% of that bar, a break to the upside is considered to be momentum and is breaking into new recent highs. It goes up, it goes inside, and then goes to the new highs, momentum. If the bar previous to an actionable signal is red, and the actionable signal break is to the upside, is considered a retracement, as the price just recently dropped. That means if the price drops, then goes inside, and goes back to the upside, we know we have at least some retracement because it has just gone down. It is important to remember that these conditions are subject to the conditions of the other time frames outside of the stated inside bar setup, which I'll cover when I get to the time frame continuity principle, as well as broadening formations. The importance of inside bar setups. Oftentimes the bar previous to the inside bar, which we call the mother bar. Right? So you can see here's the mother bar, and then it goes inside. So the bar of which the inside bar forms is called the mother bar. If this represents a large enough range, the inside bar isn't strong enough to get out of it, which means inside bar breaks down here, but it's not strong enough in this time frame to take this out. All right? This usually occurs when the bar forms in the middle of a large range like this. We want to avoid that. All right? This is where we avoid the inside bar setup because it's nowhere near taking out the mother bar. We can expect a new broadening formation series to begin as the price consolidates within that mother bar. This will be covered in detail when we get to the broadening formation portion of the course. Right now, I just want you to understand the actionable signals themselves. However, an actionable signal is close to taking out the mother bar, we can take the trade on the belief that the signal will take the price beyond the mother bar's range. You can see this here. It's a 2-bar setup, right, inside, and we'll get to this as a rev strat, and we're about to get to that. But here, you might say we're not going to take this because it's still inside this mother bar, and that's why you might not have taken it to the upside on the belief it might not be strong enough to get out here. But then this 2-bar pattern does break out of here and gets out of that. So you can see the difference between a tighter range than those large ranges, and we'll continue. We'll get to that as we move along. The danger of trading something that is still forming an inside bar. This is very important. Much like the multiple inside bar condition, this condition is something few traders realize, but it's extremely important to know. We want to know if we are trading something that's still inside a mother bar on any time frame because it's considered consolidating until it can make that higher, higher, lower, low. This is what causes the condition for people to call choppy. We don't say choppy. We understand that this is going to be doing this. We know to expect this type of action under this condition. There are periods of time when we can take trades in such condition, which will be covered with the other portions of the course. However, for this reason, The bar must close inside before it becomes actionable. That's very important. When you pull up a chart and you see something, that's an inside bar. If that bar is still live, it is forming an inside bar. It is not inside as yet. All right. Therefore, the price is still considered still inside until that bar closes. After it closes, we have established the equilibrium, and then it is considered an inside bar. Here's the danger. There's something that's forming an inside bar from just this week. This is Facebook. And you'll notice here on the right, inside bar here. It has now formed. The week is over. But during this week, when it cannot take the highs or not take the lows, and we see this forming an inside, you can expect action like this. This is the 60-minute. This is why people say, it's choppy. I'm like, of course, it's going inside. You ready? Oh, it's going down. No, it's going up. No, it's going to go down. Oh, let's gap it up. No, let's going to bring it down. Okay, let's try and bring it up again. No, we're going to down. No, up. No, down. No, down. You can get killed in here, right? We want to identify this condition. Most people miss this because they are not looking at the longer term charts, right? We are starting at the monthly, the weekly, the daily, and working our way down so we can identify this condition. Once again, I'm going to go through this because it's very important. This is U.S. Steel from last week. You'll see over here on the right, inside day completely within this bar's range. Once again, if you just look at the 15-minute chart, whoa, it's going up. No, it's going down. No, it's going up. No, down. No, down. No, up. No, down. We can expect this kind of action, which is going to create rev strats, as we're going to get to the next section of rev strats. Section 3. The rev strat. The reversal strategy, or as we call it to abbreviate it, the rev strat, is a reversal of the inside bar setup. This setup occurs either in the bar following an inside bar or a 2-bar setup following an inside bar. We can expect this setup to work because an equilibrium breakout was attempted and is failing. This means that one side has attempted the breakout has been met with a stronger force. This is a universal truth as an equilibrium break has been reversed, which cannot be disputed. This can be very powerful, and some people choose to only trade this setup because of its power. The bullish 2-bar rev strat. A bullish rev strat occurs when a hammer forms after an inside bar and price confirms the setup by moving above the hammer and going in force. We expect this to work not only because we can identify the equilibrium reversal, but also because of the mechanics of ill-timed shorts placing stops at well-known pivots. So what does that mean? What that means here is we have the inside bar here. The equilibrium attempt break to the downside, which it does. However, by the time the bar closes, it comes back up into this range without taking out the inside bar to the upside. Right, still back opening and closing in that inside bar range and forming the hammer. It goes in force as soon as the price moves above the hammer. So we'll get to how powerful this can be when we get to time frame continuity, but the ill-placed short stops would be on the top of the hammer, the top of the inside bar, the top of the mother bar. When the rev strat works properly, those two trigger the third. Stop them out, stop them out, stop them out. 1, 2, 3, pow. That's why this works, at least in portion, until we get to time frame continuity. In the next example, those stops would be above the hammer, right? The inside bar and the mother bar, right? Again, during the periods of full time frame continuity, which will be discussed in the next video, there's no reason to believe this setup won't work. I'm going to reiterate things, but let's pound it in the head, right? So, or in the previous example, I should say. Here's the next one, once again, is the bearish 2-bar rev strat. And so once again, when you hear me on the VTF, we'll say rev strat down. For right now, this is bearish because it is going down, right? Bearish rev strat occurs when a shooting star forms after an inside bar and the price confirms the setup by moving below the shooting star. Once again, this is our price equilibrium inside bar. It goes up, comes back down and closes, forming a shooting star, countering the inside bar. All right, once again, the ill-timed pivots for anybody here trying to stay long would be the bottom of this, the bottom of this, and the bottom of this. Rev strat 1, 2, 3 triggers them all. Boom, 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 boom. The 1-bar rev strat. This occurs when an inside bar is broken to one side, then reverses where the price then also breaks the other side of the inside bar during a 1-bar time frame. We can expect this pattern to work as an equilibrium is being reversed, which cannot be disputed. The bullish 1-bar rev strat. Setup occurs when the inside bar breaks to the downside, here, then reverses higher to take out the inside bar in 1 bar, as opposed to the 2-bar setup. This 1 bar attempts the downside, rips to the upside. We can expect this setup to work as equilibrium has been reversed, which cannot be disputed, as well as expecting stops on the top of well-known pivots of the highs of the inside bar and the mother bar. Once again, they attempted the downside. This goes in force as soon as it retakes the other side of the inside bar. Once again, any ill-placed shorts here and here, as well as they're meeting a stronger force going the other way. The bearish 1-bar rev strat. The setup occurs when an inside bar breaks to the other way. Upside reverses, then takes out the downside. Once again, inside equilibrium, triggers to the upside, then reverses and completely takes out the other side. Goes in force. Below here, this is where the rev strat triggers, below the equilibrium. Once again, any ill-placed short stops would be here and here. Stronger force met, brings it through. 1, 2, they're gone. The 1-bar rev strat becomes a 2-bar rev strat. This occurs when 1-bar rev strat closes and forms a hammer or shooting star candle. We'll cover the importance of this in the broadening formation discussion, but because an actionable signal has formed following an inside bar, this is still a countering of the known equilibrium. The only way this can occur is when the price equilibrium breaks. 1-bar rev strats and then retakes the original break outside of the inside bar. In this case, the new rev strat triggers above the hammer that follows the inside bar. So what do we mean by that? What that means, here's our equilibrium. All right. So because it's outside like this bar is completely outside of this bar's range, which will be important when we get to the broadening formation portion of the course. What that tells me is that it had broken both sides. Right, it's telling me it's broken both sides. So at this point, it went up, it went down, but then it's now resolving, right, outside of this. But it's an actionable signal. Any actionable signal after an inside bar is a rev strat. That goes in force above this hammer right here. So as we conclude this first video, most importantly, to take out of this first video, an inside bar must close, or it's still forming an inside bar. It's very, very important. A rev strat must follow an inside bar because it is not a classical technical reversal pattern where you will hear a technical analyst say it's a reversal. It is a reversal of the equilibrium. So those two concepts, very important to take out of this first video. And I will see you in the next video as we continue with actionable signals.